Hi. Currency and commodity trading helps the investors to get connected to the global economy. It also gives it exposure in foreign market and reaps benefits out of it. In this video, we will be discussing about the basics of currency and commodity trading. To begin with, the currency market is the largest trading market in the world, wherein $5 trillion are traded on a daily basis. Now, the Forex market comprises of investment firms, banks and Forex brokers, etc. The currency exchange takes place over the counter and the market is open throughout the day and 5.5 days a week. Now, here the currency exchange rate, the rate at which a single currency can be exchanged for another, is mentioned as pairs. Like for example, USD by CAD, which is the US dollar and the Canadian dollar. Now, the exchange rate of these currency pairs is affected by the supply and demand in the international foreign exchange market. There are three ways that trading in currencies is done. The first one is the spot market, next is futures market, and there is this forwards market. With the introduction of electronic trading and a plethora of brokers, there has been a huge surge in the spot market. Generally, people refer to the spot market where currencies are bought and sold. The forward and futures market are more popular with the companies that need to hedge their foreign exchange risk. To participate on the OTC, one needs to have a physical exposure to a currency, but on futures platform there is no such restriction. So basically, the benefit of dealing in the currency market is that it is highly liquid market wherein one can enter or exit at any time. A trader has the freedom to trade in as many as lots as he wants to. Also, it helps in making a diversified portfolio. Next is the commodity market. Here the buying and selling of commodities takes place. There are hard commodities and soft commodities. Hard commodities are those which needs to be mined or extracted like gold. Soft commodities are the one which are the agricultural products like sugar, wheat, coffee, etc. Commodity trading like currencies can be traded in the futures market as well as in the spot market. Spot market is associated with real-time prices. Commodities can also be traded in futures market. Here investors deal with contracts to buy and sell the commodity at a future date. The most popular ways of dealing in commodities are the commodity futures, ETFs and mutual funds. These are basically the modern methods of dealing in commodities wherein the investors need not go for traditional buying and selling to deal in commodities, but to buy the respective ETFs or mutual funds of the companies that have underlying assets as commodities. These market instruments work on the performance of the underlying asset, which can either be a single commodity or a group of commodities. Both currency and commodity trading requires extremely good knowledge of the global markets and how will that affect the investor's trading strategy. Thank you for watching the video.
Investment in the securities market are subject to market risks. Read all the related documents carefully before investing. Such representations are not indicative of future results.